Hello, Blake Boss here, and today we're going to do our Ask a Fool segment. This is where I answer your really important investing questions you posted for us on Facebook. And today we're going to look at a question from Rick. He's asking, I have researched 3D additive printing and have a small amount of money to invest as part of my more aggressive, more speculative investment strategy. I already have a small position in Dassault Systems because I believe they have a good handle on software, but I'd like to invest in hardware and services. I've looked at Stratasys, 3D Systems, and X1, but all seem to have be about the same as playing red or black on the old roulette wheel. Now that I know a little bit about 3D printing and believe it is the potential for a major game changer, how do I get on board? Well, Rick, let's look at this question as a business problem. And I think what you're really asking here is, I like a particular technology as huge opportunities for the future, but I don't want to pay too high of a price for that technology. Or then again, should I care about the price I pay? So I think we can look at this in 3 different steps. So first, determine if you absolutely have to invest. Then determine how much your portfolio you're willing to risk, 5%, 10%, 20%, and if you have enough funds to invest in more than one company. And to put this in perspective, I probably wouldn't recommend 20% investing myself in a particular technology like 3D printing, but if you did, if you lost all that amount, that 20%, you'd have to make 25% back. 10% invested, if you lose all that, you're going to have to make 11% just to get back to even. And if you invest 5%, you're going to need to invest 5.3%. So as you can see, if you make a big bet, it's a lot harder to make up that lost ground. So little bets are usually a good decision when investing in highly speculative areas. So be open to the idea that maybe software could be your best investment too. Maybe you shouldn't invest in hardware. And then second, then it comes to betting on your horse. If you really do want to get involved in the hardware space, I say betting because at today's prices, you'll rationally need to be in for the long term in this uncertain industry. You really don't know how it's going to play out in the long term yet. It has been around for a while, but it's really hitting its full stride right now. And then third, I personally would look first at leadership, and by leadership I mean management. To compete with the giants like GE, you'll need a strong and nimble management team. To put this in perspective, let's look at R&D budgets. It had $23 million in R&D in last fiscal year for 3D Systems, $19 million from Stratasys, and $2.3 million in R&D from X1. That's $45 million combined for the last fiscal year. And a company like GE is going to invest $3.5 billion over the next 5 years. That's $700 million a year and 15 times the budget of all 3 companies combined. And they're going to be focused on industrial manufacturing, obviously, but just put that in perspective for you, that's a lot of money they're throwing around. It's going to be hard for a lot of those smaller players to compete in that industrial 3D printing technology. So finally, there is no clear answer to the problem of investing in 3D printing at today's prices. If I were to participate, my strategy would definitely be little bets in a few companies. A person can always add to a position later. Always be aware that you don't need to put all your bets in one basket right away. You can always do it later on if you want to create a small initial position. So that's my thoughts on investing in 3D printing at today's prices. Hopefully you learned a bit from that. Thanks for watching, and Fool on.